I don't know, do you want to run the slideshow?
Do you have a?
I don't have a clicker. We're not that fancy.
I do.
Okay. Perfect. Perfect, even better.
Perfect. Okay. Well, I'm Allison Thompson and I work with the Money Farm here in Fargo. I've been working with them for about 4 years. So, and obviously markets have changed a lot since I started. I think a 2 cent, 3 cents, 5 cent day was a big move, and now we're seeing 20, 60 cents. So it's gotten a lot more exciting since I've started. But I'm actually from the Mahnomen area. My family farms, my husband now farms a little bit on our own too. So that's where I'm from. I actually live in Ada, so I got to drive through a lot of the fog this morning. So markets have been absolutely dead, right? I have absolutely nothing to talk about this morning. But obviously everybody thinks that markets are going higher, and it's really good to see them finally kind of rally back. We've kind of been in a lull, shouldn't say that, but it seems like we've been in a lull for the last couple of weeks. So it's kind of nice to see markets coming back this morning. So I'll go through everything that's been going on, which I'm sure you guys are kind of all a little bit aware of, but I'll go through what it means to us. So talking about what's in the market, obviously we're kind of in a year full of black swans, definitely in the grain markets, US production, US weather, Chinese purchases, world supplies, world weather, all those things that have kind of been thrown us some loops throughout the year. Also, we have outside markets. Even yesterday was kind of a big outside market day. We kind of saw a risk off mode happen in the outside markets, which I think kind of affected yesterday's trade a little bit, especially for soybeans. Big talk of inflation. Obviously, the US dollar is going back up. We're actually hitting 3-month highs. Crude is down about 7% over the last 2 weeks. And with this talk of inflation, another COVID variant, all those types of things, we're starting to see outside markets kind of shift. So, but also it's a good buying opportunity. So I think the little bit of turnaround we saw in the overnight had a lot to do with that. So I'll talk a little bit more about the grain market side today. And obviously the grains, I'll focus on corn, soybeans, and wheat. And then I'll go through our current recommendations and what we're kind of looking at going forward. So what's in the market? Obviously, we're talking about U.S. production. That's the main topic right now in everything is obviously the drought and how dry it is and where it's starting to affect crops. So the main thing that we're watching is obviously USDA's crop conditions. So yesterday we had the crop condition report, comes out Mondays at 3 p.m. And that ended up to be a little bit of a bullish surprise, more than what the initial trade was thinking. So we saw some good overnight trade last night. And also we're looking at those monthly reports. USDA is actually starting to make some changes ahead of time, which is good to see. We've actually gotten some bullish USDA reports this year, which is really good. It's not something we're totally used to, but I know USDA has hit a lot of slack with their monthly reports the last couple of years, and they're actually starting to make some changes, and they're actually looking at going through and making some adjustments here this fall on how they're actually finding and using these numbers. So it's good to see them finally making some changes ahead of time and not waiting for 2-3 years down the road to make some of these adjustments and surprise the trade. We're also big on demand. Demand is the big thing. The big talk is South America's corn crop. I'll go into a little bit more of that as we go through, but obviously they're known for logistical issues. So with a smaller crop size, some logistical issues, there's a lot of talk that China, who's obviously has big demand, their shipments are going to be starting to come from South America. Is that going to shift? Are they going to be looking for U.S. exports or anything like that? So obviously we have a lot of market going on, and emotion, we need to keep it out. It's hard not to get along everything with all the bullish news that we're hearing. We still need to have a good mind on our hands and think things through on what could happen and don't get overly risky. So here's the drought monitor. These come out weekly on Thursdays. So this is last week's drought monitor, and obviously we're really concerned about our tri-state area. We actually have 7% of the worst drought conditions that are possible. These D4, it's about 7% in North Dakota is now in that. We also saw some really worsening drought in Minnesota too. So we've been watching these. They've been progressively getting a little bit worse with expanding drought conditions, a little bit worse every week. We're also watching Iowa and through the I-states. They've kind of been able to hold out and not get too bad on the drought, but Northern Illinois is starting to see some. We have a new person in our office, and he's working remotely in northwest Iowa. And so he's been keeping us informed on the drought up there too. They've been getting some timely rains along with the eastern side of South Dakota, but still concerning conditions there too. So what are we seeing in the drought? Based on where most of our production is, about 36% of US corn production area is experiencing drought, about 31% of soybeans, and 98% of spring wheat. So obviously pretty concerning, and why markets are trading drought on there and crop conditions. So this is the soil moisture percentiles. This is the first 16 inches of soil depth on moisture versus normal. And you can really see that we're extremely dry up in our area, but this is the major corn producing area. So you can really tell that there's obviously some concern here. Some areas are doing better than others, but what does this mean? What's it going to do to our overall yield, right? That's the main talk right now, is we know that there's going to be some tight supplies, but how is yield going to be affected to that? So here again, I talked about the corn area, 36% of US corn, so you can kind of see where the main production areas are. 36% of it is covered in drought. So we'll see how that expands going forward. But definitely concerning, especially now when forecasts are turning a little bit hotter and drier through the I-states. So definitely worth watching and keeping an eye on. So what's in the market for corn? Obviously crop conditions, but it's important to know that crop conditions don't equal yield. So even while we're seeing some decent crop conditions, it's not necessarily going to produce a record yield. So USDA is predicting 179.5 bushels per acre as a national overall yield. So they're predicting a record, but the last record was in 2016 of 176.6. So we have a ways to go to get there. And what is concerning is that we're still at about 65% fit to excellent. Last year, we were at about 75% around this time. And actually, when looking at 2017, for this time of last year, this week we were at 75%. So conditions are further behind than they were in 2017 for this time of the year. But also in 2017, last week, we were equal. So conditions can change rapidly and still produce a pretty good crop, which I think is important to get in our mindset, is that these conditions can really change. So, and again, that's a USDA number, so sometimes we don't want to believe it anyway. So they can definitely change. So this is yesterday's crop condition report. We have 65 good to excellent. It stayed the same as last week, so they're holding steady. Trade was actually thinking we would go up 1 to 2% this last week, and we actually stayed pretty level. So with these crop conditions, we're also talking about acres. So our acres report at the end of June was pretty favorable for us. They came in lower than expectations, but still higher than the March estimate. So we're still seeing some pretty good acres, which could give us some pretty good production. So on any stock standpoint, they did go up a little bit. So the big thing that we're talking about is Minnesota, North Dakota, and South Dakota, which we're experiencing some drought. They saw more acres be put in versus last year, which isn't super surprising given the kind of year we had last year versus this year. But we are making up about 20% of total US acres just in that tri-state area. Okay, and we're hitting a record low in North Dakota of 29% only good to excellent condition. So it is definitely concerning when you're looking at it that way. But another one we were looking at too is also Minnesota. They didn't change this past week. We obviously did see some rains go through that obviously benefited some areas, but obviously conditions are staying the same. The other one that we did see Iowa. This is the 4th week Iowa's been up. So they're seeing some improved conditions, and also Illinois, the next big producer of corn too, is also seeing some better conditions. But what is 20% going to do to our yield? What kind of yield drop are we going to see here for corn in our area? We don't know. But obviously conditions are variable. where I'm at, even around here, conditions look pretty good. We're not seeing curling corn or anything like that during the day, or cupping soybeans to an extreme amount. But you don't have to go far, an hour in each direction, and we could probably start to see things change. So it's just going to depend on how the rest of the year goes, and obviously the next 30 days with pollination hitting is going to be key. I think around here, sounds like the weather kind of shifted a little bit. We're going to see a little bit more rain through our area, and maybe not as hot. Some humidity will be good for pollination. But going a little further south and into the I-states, they're actually predicting more of a heat wave now. So if that heat starts to ridge through there instead of up here like we were earlier expecting, we could definitely see some changes happening. So we talked to some insurance agents that we work with, and they're already hearing about a 35 bushel per acre drop in North Dakota. And how that looks on our ending stocks, it could drop us 126 million bushels. So, and that would get us near to that 1 billion bushel carryover for next year, which is concerning to the trade. But again, will the I-states be able to make up the deficit that we're seeing in our tri-state area or vice versa? We don't know yet. So, but this is the stuff the trade's trying to figure out and why we're kind of seeing bouncing all over the place, these 20-cent ranges based on weather forecasts. So corn's been a little bit more stagnant lately, but as we're going into pollination, these are the things that we're going to be watching very closely and we'll be seeing change. So same thing with soybeans. Here we have 31% of soybean area production that's currently experiencing drought. Again, very key to keep an eye on. Yesterday's crop conditions report did go up 1%. That was in line with trade expectations. So we're 60% good to excellent, and actually isn't that far. We are a little bit behind last year in that respect. Again, we're looking at a decent yield of 50.8. We had a record in 2016 of 51.9. So are we going to be able to get there? Depends on August rains. That's kind of what the trade is going to be holding out for, is that there's still time to make the crop. So, and we talked, Josh and I were talking about that too, and with this year being the way it is, we could actually be closer to that time than we normally would be in August. Maybe towards the end of the month, actually, we'll start to see some of that weather kind of affect things too. So acres, we're looking at that 86.5 million acres. We did add about 7 million acres in North Dakota, which accounts for about 8% of the total US acres. And our tri-state area, again, which is experiencing drought, is really close to corn. It's actually a little bit more, close to that 21% of US acres. So definitely worth considering too, if we remain hot and dry and yields actually do go down, how much will it carry down our yields going forward for the USDA? So looking at yesterday's crop conditions, we did see some good improvements in Illinois and Iowa, but we also saw some good, well, bad degradations. Minnesota dropped a couple percent. North Dakota dropped a little bit to 20% good to excellent. And actually Ohio, another one that actually dropped pretty substantially too. So another thing that the market is definitely going to be focused on going forward and into August. Looking at,
Allison, actually Ohio dropped because of too much moisture,
it was
right?
too wet. Yeah,
Yeah,
they got quite a bit of rain. Yep, they did. Yep, that's right. So looking at spring wheat acres here too, 98% of spring wheat acres are currently experiencing drought, which isn't very surprising. The only good spot seems to be in western Montana, which is kind of surprising. We'll see what happens on this week's drought monitor. So this was kind of that got the major talk on the overnight and yesterday after the crop conditions came out, is we're only seeing 11% of the crop in good to excellent condition and only 1% of the crop in excellent condition. So it's definitely concerning for spring wheat. What also on the very poor side, we're seeing 63% of the crop in poor to very poor condition. So typically these numbers would be reversed. They should be opposite of what we're actually seeing. So obviously the trade is starting to realize that the rains that did come through that we were trading lower on aren't going to be making the crop. It's not going to be there. We have multiple producers further west and actually into Montana. If any of you saw our commentary yesterday, we included a picture from some wheat fields out in Montana. And the wheat is only about mid-calf high, and the heads are just small and tiny, and it actually looks like they maybe combined it already. It looked like stubble. So, and they're probably going to have to zero it out, and they're not going to have much of a crop there. So, and I have a feeling that's a lot more widespread than we'd like to admit. So this year they did lower production pretty much in half of what normal would be. About 30.7 is what they're looking at, the worst since 2002. So we'll be seeing, but also this next week with some hot and dry weather, I think next week there's already talk in trade that we could see plus 70% in that poor to very poor category. Acres did come in a little bit higher, overall wheat acres, but we did have lower durum and spring wheat acres, and we're looking at a very small crop since 1988. So looking at crops and wheat and spring wheat production, you can see that 2021, they're looking at a pretty low crop and also very low yield. So the last lowest one, we're the lowest since 1988, very comparable, with production being low and obviously a steep drop in yield too. So there's been already a lot of comparisons you probably heard too in comparison to 1988. Another thing that we've already been talking about is abandonment acres. On a typical year for spring wheat, it's about 3.5% we'll see abandonment. This year, there's already talk that we could see 20 to 30, 35% of abandonment acres, and in 1988, we saw about 22%. So, there's been a lot of comparisons, a lot of similarities, to what we're seeing from there. So we'll have to see, again, we'll find out more this fall. Combines are gonna roll sooner than later, and the trade's gonna realize there isn't that crop there. So I honestly think that spring wheat has some wiggle room yet to go up. Looking at forecasts, I was talking about these, the 6 to 10 day, these were as of yesterday morning. We're looking at some 6 to 10 days, obviously dry, really hot, and this isn't that much different. We're looking at some pretty dry conditions, especially for our area, and also some pretty hot temperatures. So the one thing we are watching though is that you can see the eye states are starting to get some more of this dry area moving in. So if that continues to shift downward and around there, we could definitely see some pop in prices over the next month. So worth definitely watching, because they're by no means have an abundance of moisture, except for Ohio probably, as they got a few inches of rain, but it definitely hurt their crop there. Further out last week, NOAA did release their 1 month and 3 month forecast. So for the month of August, they are looking at it being a lot hotter than normal, but pretty normal for our area, except for further west on the precipitation front. But looking out through fall, we're looking at overall hot and dry weather remaining in our forecast through fall. So looking at the other part of the USDA reports for ending stocks, obviously US stocks are really tight. You don't leave a whole lot of room for error. So this is what I was talking about with corn. If we see that, a drop in production, we could be closer to that 1 billion bushel mark. Same with soybeans, we're already at tight levels, and wheat as well. So they did lower them substantially here in this last report, which was good to see. But I think it could definitely become lower too. The other thing we're watching is definitely exports. We haven't seen a whole lot of export activity on corn and soybeans lately, which is kind of a bummer. But we'll be watching it, especially going forward with South America's crops starting to hit markets. World stocks too, in this last July report, we did see larger world stocks for corn and soybeans. Corn is mainly due to larger US production, and again, that had a lot to do with the acres numbers we saw. They haven't changed yield yet, but acres still did go up, so that increased our world stocks. We did get larger soybean stocks based on Chinese imports. They did get lowered slightly on this last report, and obviously we have tighter wheat, and that was based on US production numbers. So looking at South America, we've been talking about this all winter, that they had a late planting season, which pushed their planting back, which pushed their season back, and now they're experiencing their dry season. So there's been a lot of places in the media talking that they're in a drought. Well, it's not a drought, they're actually in their dry season. Everything just got pushed back. So they're experiencing those conditions now while they're trying to get the crop out. They've also been experiencing frost. In fact, yesterday morning, they actually had frost again. That affected some areas, not as much on the corn side this last time, but they definitely did have some damage. And harvest has been pretty slow. They're about 30% complete in Brazil right now. So USDA did finally do some cutting to Brazil's corn crop. They did cut it to 93 million metric tons, but a lot of estimates are sub 90. Right now, and I think USDA is going to have to make that adjustment here sooner than later. We're all kind of thinking this next month they might finally make a little bit more of an adjustment lower. But most private analysts that are in Brazil are at 89, 88, somewhere in there for their crop size. So I think it's definitely something that's going to be going down. This is Brazil's second crop corn. This is their big producing state, Mato Grosso. So here you can already see some of their corn crops looking a little bit shorter, again, due to the weather season that they've been experiencing. So how will this affect US exports? Obviously, China's the big buyer of second crop corn, right? As soon as their crop hits the market, they kind of stick with South America until fall, and then they start buying again from the US. So with them being short, there's already talk that Brazil could use a lot of the crop that they are producing for domestic use. They're not gonna have as much to export. So with that, we're just trying to turn. China's rebuilding herds, they're restocking their stocks and, ending stocks. So where are they gonna get it? Well, the next biggest producer of corn is us. And we have some exportable supply. So there is a lot of talk that China has been looking at US corn prices. They've been looking at US soybean prices. We just haven't seen any big export sales yet. We're kind of in the mindset, I think it's coming. I think demand's gonna be a bigger story, especially for corn coming. Once they finish harvesting their corn, I think they're gonna realize a lot of things can change. And again, they have logistical issues, they have port strikes, their roads aren't great, their rivers are low right now, they're pretty dry. So they've had trouble moving barges up from their main transport rivers. So there's lots of bullishness in the South American weather story right now. So especially for corn. So it's definitely something we're probably not done hearing about. We're gonna be hearing a lot more about it this year more than others, since their crop has definitely been affected. So kind of summarizing it up on corn and soybeans, obviously we're concerned about the US crop. Another thing that's been affecting our soybean prices is oil seeds. So there's obviously Canada's canola crop is affected just like their wheat crop is, and their canola crop, they're a big exporter. If their crop isn't there, they're going to need the oil seed and the rapeseed available. So canola prices have gone up. They've been skyrocketing, which is awesome, but it also pushes up soy oil, palm oils, all these other oil markets with it. So that's given some really good support to our soybean futures too. So it's important to remember that that soy complex is kind of important. We've also had some expanded limit days based on that. So soy oil has sometimes hit their daily limits. We've had expanded limits in beans. Remember, soybeans have a limit a day of $1 now. That's an insane move, and we've actually got close to it. I think we moved 98 or 97 cents that one day, and we're like, whoa. So it's pretty crazy now, but we can see those expanded limits just because another part of the soy complex also hit limits. So another thing worth watching is definitely those oil markets. Obviously, demand, like I talked about with US exports, I think we're not done there. And again, with South America, we've already been hearing some rumors that there are some cancellations happening in South America with their exports, but nothing firm yet, but I think it's definitely happening. Again, two-sided demand on the bear side too. We haven't seen any of the big exports coming yet. We haven't seen a whole lot move or change there. And also we still need China. Remember, we're still in this agreement with them, and we definitely need that to continue. So there's a lot of different things, and I won't get political, but there's definitely some things moving too that could affect our relationship with China in more ways than one. So we'll be watching that, but we definitely could use some new sales. We did sell some wheat to them last week, which was a good first move and a good step. So hopefully we'll just get more of the corn and soybeans, which would be really more beneficial. So looking at December corn futures, so this is at the close yesterday. And there's a lot of different things to talk about on charts. I don't know if you guys are too technical analysts, but I enjoy the technical side, and so does Alan. I've been learning quite a bit actually from him. So a couple things that I'm watching. This was yesterday's trade. We actually did have a key reversal yesterday. We traded higher and lower than the previous day and closed lower. So technically it was reversal, but on the overnight, they shot my theory down and we went up. So that's the one thing with technicals is that typically they repeat themselves, but not necessarily. So important to watch. So we're starting to go up. We're probably closer to filling this gap that was left after the 4th of July weekend. That's been the talk ever since then about filling that gap again. So we've been kind of working on it, and we've not been able to the last 3 trading sessions, which kind of was a bearish factor. We thought, okay, maybe that's it. We're going to go down and test support at 520, which could very well be. But now that we're trading up, there's also talk that we can shoot through that and just keep going. So with that, so that was like a 20-cent gap that we had that morning. we'll be following that. But also, we're watching a pendant formation. I'm gonna throw that out at you too. So basically, it's like a flag that we're doing. We're creating lower highs and higher lows. This one's kind of evened out, but even so, it can still kind of make that pattern. And these are continuation patterns. So if I was to back this all out, we've actually traded a lot lower. I don't even want to say 290 or anything before that, but we've been continuing going up. So as we kind of get closer to closing this pennant, getting to a point, we should shoot up historically. So we'll be watching that too. So there was talk that if we fill this gap, we could just keep shooting, and that could very well be the case, given all the talk that's in the marketplace. So we'll be watching that too. But otherwise, yeah, we have really good support around that 520 area, so watching that very closely. Another thing I watch is stochastics. I don't know if you guys ever watch those in your marketing club too, but we're kind of at a point here too where they could actually turn more. So that's where I was thinking, well, if we actually go down and test 520, good buying opportunity, good time to get in. So there's lots of different things that I watch on the technical side too to kind of help give a little bit of advice. Looking at November futures, same type of thing. Yesterday we had a reversal higher, lower than the previous day, and we closed lower. So that one was kind of key. But again, we're trading up so far this morning, so that's good. But we're also starting to see a pennant formation form in November beans. So just like we were seeing on the corn, continuation pattern should shoot up. Keep your fingers crossed. But yeah, we're starting to see those lower highs and higher lows kind of forming too. And then here yesterday, stochastics did cross pretty, which would signal a turn too, but again, things changed. So we had some more bullish news on the overnight. So when we did fill the gap from July 6th on beans, that happened a lot easier than it did on the corn side, but also a smaller gap to watch too. But we are kind of watching that 1360 mark. That would kind of be our next line of watching some key support there too, if we were to go forward. So looking on the wheat side, again, lower production. We're already hearing talk about protein premiums, especially with the winter wheat crop being high yielding, but no protein. Here we'll probably have a lot less yield and higher protein. So there's already been talk in the market that we'll probably start to see some of these protein premiums. We've already heard from some of the elevators that are offering 5 or 0 cent basis for harvest delivery already. So probably we're talking to some of your elevators about those things too. And again, like I talked about those abandonment acres, depending on what area they're going to be at, some bids this fall could get pretty crazy for spring wheat. So really stay on top of it. But also on world production side, we're starting to see a lot more bullish news too. So just like we're dry, Russia's also experiencing some dryness. They're actually worried about their crop being lower in production, and they're another big world producer of spring wheat. So if that ends up being true, we could get even crazier with wheat. So that's another one worth watching. Another one would be the EU. They're harvesting wheat now too, but on the flip side, they've been wet. So there's actually concern there about their quality of their milk. So, and obviously Canada's having the same issues we are. They're extremely dry. So their production should definitely be lower. USDA hasn't lowered it enough yet, I don't think. So we should start seeing some of that hit too as we enter. So the other thing on the world side too is Australia is definitely, they're predicting a big crop this year there, but it's pretty early in their season yet. So we'll be watching that one too. This is Canada's drought monitor. They don't come out as regularly as the US side, so it's kind of hit and miss on finding them sometimes, but they're definitely extremely dry in their main growing areas. And on the next map, I put in where their canola, big production for canola, and their wheat acres are, and you can definitely see it's definitely in some big drought areas. So looking at September Minneapolis wheat here too, we're definitely in a very solid uptrend, no pennant or anything there, but it's looking like a really good chart, to be honest with you. Looking at stochastics though, we are above that 80% level, which is technically overbought. And with that, it would technically signal a sell signal. But it's also important to remember that these things can stay up here and cross multiple times and markets can still go up. So it's just a tool in the toolbox, I like to say. Maybe don't follow it quite as religiously, but it's definitely there. So we haven't traded this high in quite a while, and honestly, there's probably not a whole lot of, resistance or support. Our next target was in the nines. So, and I think we're probably trading there this morning, so, but again, news and stuff can always shift, so we sometimes move our targets too, but when we were definitely in the upper eights, that's where our next target was the 950 mark. So what we're watching, what we're looking at, going forward, I'm gonna sound like an FBM person, because I used to do FBM. And definitely, I'd start obviously knowing your cash flows, knowing your break evens, because that's gonna help you make better marketing decisions. So while we're having all these great news in the markets, it's important to take some of that emotion out, and at least know where you're standing. So I would first start there, and of course, know your risk. I think that's probably the main key I have, this year especially, is dealing with guys who don't know what their risk tolerance is. Especially if you're working with a broker or working on the futures trading, I would definitely understand your risk involved. If you're not comfortable with a whole lot of risk, stick with options. They're expensive, but you know what your risk is, you know your costs. If you are comfortable with a little bit more risk and doing futures, that's fine, but you're 1-for-1 with the market. So understand these big days can add up. You know, looking at $1 a day or anything like that, it can be a $5 grand move in your account pretty easily on one contract. Okay, so you have to understand what you're comfortable with on the risk side. So just be aware of that. We've been doing a lot of futures, especially in spring wheat. Is just going straight into futures just because it's so thin on the option side, but we're really stressing to make sure you put a stop in. Know your risk, so if it was to work against you, you have a loss stop. And as markets continue to go up, we just keep moving the stops up. So things like that, just to be aware of your risk, know your risk tolerance, what you're comfortable with losing. So don't call me when we're down 50 cents and you can have to stop it. but that's literally what we're working with this year is a lot more movement, a lot more volatility. So it's important to know your risk with that. So obviously we've been making some sales and doing some reownership as we've gone right now. So this is kind of where we're sitting. The only thing we have left, the 2020 crop, is about 30% of wheat. The parentheses prices are actually our futures, so basis isn't accounted just because we cover such a wide area, we don't put basis in. So they're just futures prices. So that's all that we have left on 2020. 2021, we do have obviously corn, we do have soybean, or 2021, yes. We're 35% sold on corn, 40% sold on soybeans, and 30% sold on wheat. We do have a little bit of some hedging in here. We have a 10% hedge. We have a 5% reownership and a 10% hedge on soybeans. But these are our average cash prices so far of what we have. And honestly, for this time of year and the year that we're having, a lot of guys are comfortable with that. A third sold, 25, a quarter% sold. Doing any more than that gets a little hesitant, I think, this time of year, depending on what area you're in. So obviously doing some protecting on possible production is another option. We've been recommending doing some puts for corn or soybeans, at least to protecting something as we go, and maybe just stick with front if you'll get in a little bit cheaper than going out further, and we can always keep rolling them up too. That's another option, and you know what your risk is too. Going out to 2022, we haven't sold any corn and soybeans yet. We did do one sale of wheat. We sold at 732 futures, and we did a 10% sale out there. But we are definitely watching corn and soybeans. We just haven't pulled the trigger quite yet. And I think with a lot of our clients too, especially further west, where we're having trouble this year, it's a little bit harder to push the sale for next year too, given what some crops look like in some areas. But that's the gist of where we're sitting. I think we're going to be pretty comfortable sitting at that third sold area, at least until we get into maybe August and see if we get a little bit of a weather rally or something here too. So, but yeah, things can always change. I hate putting price targets on. We do some price targets and things like that. We mostly keep them internally because a lot of things can change once we get there. So we just stick with this and kind of go from there. Otherwise, I have a managed bushels program. We do some personalized marketing plans. For guys, we also have a newsletter that we send out daily too, that kind of gives our thoughts on what's gonna happen for the day. But that's all I got. I kind of ran through it pretty quickly. There's a lot out there. Don't get caught up with emotions and things going on. I know it's tough not to. I part two, I'm the most bullish one in the office because I have ground. So Luke has to keep me toned down sometimes, but I'd say on all three crops, we're definitely optimistic going forward. I think there's definitely room. So do you have any questions for me? Otherwise, I'd honestly be happy to take calls. Feel free to shoot me an email. Be happy to talk with you anytime. Call me on an up day, would be nice. I get a lot more calls on the down days, so what the hell did you do? That's normally what I get. I take one on an up day too, so, but yeah, feel free to give me a call, give me a question. Anytime.
Questions?
Do you think the spring wheat crop will turn out better than everybody thinks in the market? They should die?
No, I don't. I think even with what we're priced at, half of yield, I don't see us doing better than half of the normal year. Like with where they're putting stuff at, I don't see it being that much better. And I think the market has it priced close to where we'd be for what the USDA is getting. I really do. If we're at 9.5, I really think that's probably a really good price for half of the normal production. I have a hard time believing we'll have 75% or we're gonna have a 45 bushel average yield. I don't see that. It's not gonna happen, especially when further west, that is their top yield. If they get 45 bushels an acre, they're happy with that on a normal year. I don't see that being an average for this year for production. I really don't. So honestly, I'd say we're pretty good here. I'd say we could consolidate where we're at here. If stuff stays, I'd say we're pretty fair above 9. But yeah, if anything, I'd say we're probably gonna be lower than what they're expecting now than higher.
I mean, if the yield is okay, then probably more acres are abandoned than they think.
Yeah, we've talked to a few guys out west that have been baling it if they're able to. Even barley has been getting a lot of bale crop too, because they're short on feed out there too. If they're able to. We actually heard from some guys yesterday that have zero outline insurance that are further west already. They're just seeing abortments in the filling. So I think it's definitely concerning out there. I can't see it turning into any better at this point. The world side might have more of an impact, if Russia ends up having a record crop, Australia has a record crop, the EU ends up being wonderful. That could definitely have more of an impact too on the wheat market.
Spring wheat is separated from the other markets significantly. I mean, can it separate even more? I mean, that's one thing when I talked to Frank, he's always said like, yeah, the wheat is wheat, we look at it, but he said in reality, the end users want a specific type or quality of wheat when they demand it.
Yeah, it was good to see it separate. I think that's healthy, especially given what we're experiencing with our wheat in Minneapolis. But it's separating a ton more. I don't know if it could do more than what it is. I'm not sure. It's good to see it pull the other ones with it. What we're actually thinking about now is, for the longest time, corn supported wheat. Okay, well, what happens now if wheat supports corn? A little bit. You know, we could start seeing some funky stuff with that happening based on wheat too. So, yeah, it's an interesting market. But yeah, it could definitely separate a little bit more, but honestly, I don't know how much leg it has on its own, since it's just mainly traded market anyway, but sometimes that can be some funky stuff too.
Any other questions?